Tom Lydon here in Hollywood, Florida at the Inside ETF conference, and I'm here with Mannik Dhillon, who's president of VictoryShares and Solutions. Great seeing you, Mannik.
Thanks for having me again, Tom.
So you and I are in the same wavelength here. We talk a little bit about the stock market, and we're cheering it on like everyone else.
Right.
But, you know, 9 years, a little bit long in the tooth. Are we going to get back to normal times and volatility at one point in time?
It almost has to.
Yeah.
Right. Markets move through different cycles. Active versus passive moves through cycles. So you can't expect what's happened to always continue forever in the market. And that's why some of the things that have occurred because of cap weighting and all the money going into these indices, like the concentration in certain sectors like technology, you would expect that at some point would have to unwind. So the longer a bull market runs and assets flow into the index or the market, it can reverse pretty quickly the other way if sentiment changes.
And from a probability standpoint, it has to happen. So the big question for the average advisor is, are you ready and what's your strategy, right?
Exactly. So I think after this many years of a market that's gone straight up, we forget what happened during the financial crisis. A lot of investors don't remember what it was like to have to make those tough decisions when the market's down 20, 30, 40%.
Right. So what you folks have done is recently launched an ETF that has a specific strategy that may not be 100% invested and actually may be as much as 100% in cash, is that right?
Absolutely. Up to 75% in cash.
Okay.
So products like CFO and CDC, which have been around over 3 years now, have collectively over $1 billion in assets, help investors avoid those emotional hesitations and emotional biases, right?
Yeah.
Where if the market drops, it can go up to 75% cash. But the more important thing is it can help them systematically reinvest as the market gets worse.
Yeah.
That's what was very difficult to do, I think, for a lot of investors at the bottom of the crisis.
Well, you have a new report out saying the winter is coming.
Yeah, right.
And you talk about this new rules-based discipline within the VictoryShares US 500 Enhanced Volatility ETF CFO that you mentioned. So I would encourage everybody, we'll do a link on this video to get this report because it really looks good, because based on the systematic approach, and again, a discipline based on the declines in the market, how much cash you have within this ETF.
Right.
It's a strategy that is non-emotional, right?
Exactly. And from our standpoint, it's not about which one is exactly going to be right. It's about having that plan up front before that time comes. And that's what we're trying to provide here. Every month, the index looks back at the all-time high and it makes that relative decision. So the investors and the advisors don't have to, but it's all about having a plan before you need a plan.
Absolutely. And that's what's key and critical. We all know what happened in the last financial crisis. Nobody saw it coming,
Right.
and nobody planned for it in advance, and most of the money came out of the market after all the damage was done. We don't want to be put in that boat.
Right.
All right. Mannik, as always, great seeing you. Thank you.
Good. Thank you very much.